for a while. So we'll go through the basic course. So we're assuming everybody does not know anything. But in case you've known a little already, just hold on. Let's carry everybody along. So we're going to start from the scratch so that all of us will be on the same page. All of us will be on the same page. So I'll be sharing a slide that we'll be using for our basic class. Okay, talking about Forex. Mute your mic, please mute your mic. King Kenneth, mute your mic. A minute, please. Let me get the slide for this course. Okay. Hope you all can see my slide. Okay, talking about Forex, we want to look at the reason why we trade the financial market, the things we can trade, and some terminologies, and how the platform we're going to be using to trade, talking about the lot size. Please mute your mic, please. Talk about the lot size, talk about the pips, talk about the history of Forex, talking about buying and selling, and some other basic things. All of this we'll discuss in our basic course. So the basic will be little of stories. Okay, then from basic, we'll go into intermediate, which we see as technical analysis, which will define where to buy and sell a particular asset. So history of economic thoughts. This is all here to actually address the background of trading the financial market, which talks about economy, okay, which defines economy of a state or a country or of a nation, defines the strength of that country. And when you talk about the strength of a country, it said the value of the currency, all is based on the economic strength of a nation. And what is economy? The state of a country. Okay, the state in terms of production, distribution, or trade, and consumption of goods and services by different agents. That's the state of a country. That's economic thoughts. I mean, not really emphasize on that. Then what is economy? Is the state of a country or a region in terms of production and consumption of goods and services and the supply of money. How money moves around the system. Please, if you're lying down, stand up. We are serious in this class. And this is where we are in for a serious business. This is, just take this as, if possible, when we want to start a class, sit on a desk, use your pen and paper so that you know you are coming for a serious business, so that you could understand what we are saying. Please, it's very important, please. Okay, thank you. Now, it is a state of a country or region in terms of production of goods and services by different agents, and also the supply of money, talking about how money moves around the system. Okay, so that is economy. It can also be considered as a careful management of available resources. How you point in time is also what we know as economy, just like starting from your family, how you manage the money in your pocket as of the time you have it. You move to the society, you move to your community, you move to the churches, small agents before we get to the government and the larger economy or the larger society. Now, however we manage the little resources we have at hand is what we know as the state of our economy as of that time, which could be from your pocket, from the family, little companies, firms, businesses, church, anything you can think of. Okay, that's economy, the state of that region or country or nation or family or your pocket. The state of your pocket is your economic strength. Okay, now talking about economic branches, we have all of this. This is for those that is looking for certificates. We are not here for certificates, we are here for practical course. So we have all of this: history, school of economy, mainstream economics, all of this. Now, I'm not going to emphasize much in all of this. We are going to look at the ones that are directly related to what we'll be doing or what we'll be learning in this course. Okay, talking about political economy. Political economy defines, in fact, is actually what defines the policies that guides an economy. Because the state of an economy or the level of an economy is determined by the political strength that particular state or particular nation or particular whatever has. Who is looking after that economy? Whatever policies they make has a way of affecting the economy. Also, during elections also have a way of putting suspense and doubt in the mind of investors, in the sense that when you move from a particular government to change a new government comes with new policies. Now, those new policies, investors wouldn't know until the person comes in, settles down, and starts to make his or her own policies. Now, those policies he or she is making will guide the future of that economy for the period of time the person will stay on that seat. Okay. Now, for example, in our nation, talking about the time of Goodluck's exit to Buhari's tenure. Now, when Buhari is leaving the seat as well, the new government, the new person that is voted in, it will go a period of study. That means investors will need to study his pattern of policies. Now, his pattern of policies will make, if investors will have to return back to Nigeria, when we talk of investors now, we're talking of foreign investors that can bring in foreign currencies to invest in the country, okay, to impact in the economy of the country. Now, everything also depends on the new president. That's political economy. How economic strength is defined by the policies that is being made by those that oversees that economy. Okay, that's political economy, which it comes up as as the years comes by, because nobody plans for it. When it happens, you need to follow the decision of the present government to know if you are to invest in a particular nation or pull out your fund from a particular nation. Now, I'm talking about microeconomics. Microeconomics talks about how the individuals, okay, I think the micro and macro, I will define it in the next slide. Now let's talk about international economics. International economics talks about international trade, which is one reason why Forex cannot go down, in the sense that countries or nations trade among themselves. Okay, no country is an island. A country may need oil, crude. Another country may need wheat or cocoa or any other raw material. The country that has those materials will have to buy from, will have to import from another country that does not have it, thereby exchanging through their central banks, actually through their central banks and all of that, thereby exchanging currencies. Okay, just like in Australia or New Zealand, China imports all of those aluminum, tin, copper they use for infrastructure, bridges and all of that from New Zealand. That's Forex they're trading. The USA imports oil, crude from Canada, because USA is the #1 market of Canada in terms of oil sales. Is Forex that trading, and all of that, on and on. Also, Nigeria is also a case study where we import virtually everything we use in the country, which is why our GDP is not growing. We are as well trading Forex because we are sending out our local currency to all those cities we are importing those stuffs from, adding to their own economy, adding to their GDP, adding to their current accounts, improving their economy. But that's by the way. Now, that's international trade or international economies. And every other one here, mathematical economics, applied economics, and econometrics. Mathematical economics and economics talks about representation of data, representation of prices, representation of histories in charts. Okay, representation of histories, data, and all of that in charts. That's political economy, which econometrics and mathematical economy, which is what we are going to be discussing during our intermediate class. How these prices are being represented in the charts. Okay, so that's this. But then let's go to the next slide, which talks about micro and macro economies. Now, microeconomics talks about the individual behaviors towards the bigger economy, or how the masses, okay, is able to actually analyze the market mechanism. Market mechanism talks about supply and demand, which is the normal supply and demand rule says a product that has a high demand, okay, the price tends to go up. If there is a high demand on a particular asset, a high demand on a particular product, okay, prices tend to go up for that product. Whereas when there is excess supply for a particular product, prices tends to go down. Now, that is what the microeconomics defines, which is me and you. Now, what will make us demand for a particular product is when we have value for it. When that particular product has value, or excuse me, when we have need for a particular product, the demand will be up, the demand will be high. And if the demand is high, invariably the price of that goods or services or that product will go up. And the opposite is the case. When there is less demand for a particular product, then that means, and there is excess supply for it, that means the prices of that goods will go down. Now, this is what the microeconomics defines, which are the individuals, me and you, because we demand for what we need. Okay, so microeconomics analyzes where market is efficient and where market fails. That's for microeconomics. Now, the macro, like I said, this is a little of stories. Just be patient before we get to the main business. We're just trying to build a foundation on how this works. Okay, now macroeconomics talks about the larger economy, from the word macro, the bigger economy. Okay, talking about how which really talks about the economic state of a nation, the economic state of a state of a country. Okay, what defines the economic state? Remember, is from micro to macro. What defines the economic state is how well the individuals or the citizens are faring. How well the citizens are faring is what defines the economic state of that nation. And now, what defines the state of how they are faring is dependent on some factors, okay, which we listed here as GDP, which is gross domestic product. We have unemployment rates. You can have it as unemployment rates or employment rates. Now, you can have national income, you can have price indices, and whole lot of them. Now, these are economic indicators that help the society or that help the policymakers to track the strength of an economy. There are a whole lot of them which you'll be learning. This will form your fundamentals or your advanced learning in this course. That's using the fundamental or economic data to analyze the state of a country based on the results that is being printed out, maybe on weekly basis, on daily basis, on monthly basis. Now you gather these results, you gather these histories, you gather these data, then you compare it to another nation, you compare it to other results, and from there you can make a decision on a particular economy that is actually functioning well or that is actually doing well. Just like if you want to trade AUD, Australian dollar, you don't need to travel to Australia to trade it, or you don't need to go there to know what their GDP, employment rate, national income, and all of that is doing. You can only get that data through online because it's being released to the public to compare so that they can decide where they want to invest. Inflation, talking about inflation, interest rates, there are a whole lot of them. This forms the economic fundamental data that traders, investors, hedge funds, banks look out for on daily basis to actually ascertain the strength of an economy. Of course, if the GDP of a nation is high, it's expected that their economy is doing well. They have quite a number of manpower that is into production. Their factories are working, their indigenous factories are working because they have manpower. And invariably, that means they have good employment. That means they have the youth, those that are within the working age are employed. That means, of course, if they're employed, if they're engaged, that means there'll be less of social vices because they're engaged in a meaningful employment. They're employed and they're being paid on a monthly basis. That means they have enough to feed themselves, right? So there'll be less of crime. There'll be less of, that means the society or that region, or the society or that state or that country has some level of security. Now, if that state or that country or whatever it is has some level of security, that means investors will have free mind to actually come into that place to invest because they know there are no social vices. They know there are no, please. Please mute your mic now. Please help us. I'm trying to mute him here. He's not muting. No, Nick King, mute your mic. I'm trying to mute you from here. Please mute your mic. Now, if investors see that there is some level of security of their investments are secured, and the people are employed, the prices of goods and services are fair enough, and the inflation rate is not high, interest rate is good for their investment and all of that, they will be happy to put their money or to invest in that economy. Now, when you're talking about investment in currency trading, you said you're buying into that currency. You're buying into that currency. If you're talking of withdrawing your investment, that means you're selling off that particular currency to look for a better place to put your money, because no investor wants to put their money where their money is not safe. Now, how do you determine if your investment is safe? Is through macro or macroeconomic data like we just listed. Now, don't worry about this. This will be taken one after the other in your fundamental class, which will form your advanced course. How to use some basic fundamental macroeconomic data to actually analyze the country, the strength or the weakness of a country before you can now say, okay, I want to put my money here, I want to buy or sell and all of that. Now, these data are released on daily basis for traders, for investors, for banks to look into those data and draw conclusion and decide where they should put their money. So this is about macroeconomic data. Like I said, we are trying to build a foundation on what we are going to be seeing. Now we have differences. I'm not going through all of this. If you want this manual, you can pay for it. It's 3,000. Okay, for the basic slide, for the basic class, it's 3,000. If you want the manual, you can ask any of the admin. They will send the manual to your email so that you can go through them. Because I'm not going to be reading everything. Like I said, it's just a little story in your basic. Then after basic, we'll move to the main business. But in as much as there are stories, please, you still need to understand what we're saying. It's very important. If you miss your basic class, you have missed almost 60% of your basic knowledge in forex trading. So forget that there are stories. Just listen to those stories and assimilate them. Get the manual and read it up so that when we get to the main business, it won't be so confusing. The chart won't confuse you. You will know where we are coming from. So please, just stay put and listen to what we are saying. Now, talking about statistics. Statistics talks about collection of data, analyzing, interpretation, presentation, and organization of data, which is a branch of mathematics, okay? What we mean is, now all these data over time is being collated, is being taken, is being organized, is being interpreted, then it will be presented for the public to also draw conclusion or inference from them. That is, in the essence, you want to, when you collect all those data, is for you to make your trading decision from the data you collected. Okay, now that's the essence of statistics. That means those things come with number. Okay, you collect their numbers, the results given to you. You use it to refer to the past history or the past record of those economies. Let's say I could remember when I started learning how to trade. That was the peak. That was when pandemic just started. That was late 2019. Yes, around that October, November. And I could remember the interest rate of US was then 2.5 before that pandemic hit the world. And in less than 2 weeks, USD dropped their interest rate from 2.5 to 2. They first dropped it to 0.5 figure. They dropped it to 2, from 2 to 1.5, from 1.5 to 1. From 1, they dropped it to 0.5. Now, currently is at 0.25. Is at between interest rate now of US is between 0.0 to 0.25. You can see it already has a statistics of their interest rate compared to where it is now. That means if peradventure, which we're expecting very soon, that the US will hike their interest rates, if peradventure they hike their interest rates, now it will give you already, you have a history of the price of USD compared to other currencies, where those prices were when the interest rate was 2.5. That means anything that makes them hike it again, price will definitely go back to where it is. Now with this, it has created a level in the chart for you as a trader to make use of when price comes back or when interest rate returns to that price. Now, these are statistics that are being kept for you as a trader to analyze over time so that you can draw your conclusion and make trading decisions from them. That's statistics. Now, talking about introduction to financial market. What's the financial market? A financial market is A business finance refers to money and credit employed to business. Okay, that's bringing money to business and bringing it as of when business is needed. Of course, even in your trading, you also need money for your trading. But let's not dwell much on that. Now, talking about financial markets is where we buy and sell financial securities and derivatives at low transaction costs. Now, what are securities? Securities are seen as anything that has any form of economic or monetary value attached to it. That's security. A market is just where you do buying and selling, which we have our local markets in Port Harcourt, where we have markets like My One Market, we have My Three Market, we have Oil Mill Market, and all of that. In Nigeria, you can say Onitsha Market, you can say Ariaria Market. Lagosians have their own markets. Those in the north have their own, market where they do major market buying and selling. We also have street market. Everything that has to do with market is a place of buying and selling. It's the same thing we're going to be doing here, buying and selling at a particular price. Okay, but in this case, now when you talk about financial market, you talk about buying and selling those things that have some level of economic value, monetary value attached to it, can be bought or sold, right? So now because we can't go, which can be money itself, okay? Can be buying and selling of money, which most of us know as Forex. It can be stocks, bonds, and special metals, and so many other things. Now, if because I want to buy a particular currency, okay, I may not need to travel out to do that buying and selling. That means I will have to buy it from a decentralized market, which is why we use brokerage platform to do the buying and selling, because we cannot travel out to trade those things, or we don't even have the volume it requires to trade on those commodities or money or stocks. So we have to do it through the brokerage platform, which is a leverage platform for buying and selling, which in this case, we're going to be using FX space, but we'll get to where we need to know about the brokerage. Now, structure of financial markets, talking about capital markets. Talking about capital market is where is where capital is made, where money is generated for business. That's capital market, where money is generated for business. Now, capital markets are made up of stock markets, talking about buying and selling of shares, company shares. Dangote can decide to sell shares. I remember sometime December, yeah, MTN sold some shares out. Yes, and so many persons, so many Nigerians invested in the stocks or in the shares of MTN. Now the question is, for some of us that invested, have we made profit from that shares? Yes, it has started growing, but because we understand that it's a long-term investment. And what prompted us to invest in the shares of MTN? Why? Because we understand that MTN, as it is, be it a telecommunication company, has a prospect, a future in Nigeria. They are still, of course, everybody, even if you have other networks, you must, in the farm, there is no farm that does not have MTN network. Even if in the region where MTN does not have network, you still see some atom of network of MTN. That means is the market in Nigeria in terms of telecommunication. That means there is prospect for MTN shares. So when they brought their shares out to the public to sell their shares out, what they said, maybe they had some projects they want to run in other parts of the world. They can say, okay, come and buy into our shares. In essence, they want to generate money for the company by selling out their shares, making it public for people to invest in their shares. That means if the shares continue growing, you will make profit from it. It could be 1 year interval, it could be 3 years interval, it could be, before you can think of taking your profits from the shares of MTN. Now, at the same time, it does not mean that that shares you bought cannot go down or cannot vanish, because it's an investment. Now, what if there's a policy or a government that enters and says, okay, we are no longer using MTN in Nigeria as a telecommunication. We have a new model that we want to use in the country. We no longer need MTN. Now, that means the shares, you that invested in the shares of MTN will actually be in losses. Now, it does not mean that it will completely go down. The only thing is that their rate, their sales will reduce because the Nigerian market is off their business. Their sales, their market, your shares will reduce in value. Now, if they decide to shift to another part of Africa, like Ghana and some other areas, you still have shares with them because you're already part of the company. You've bought into their shares. But the only thing is that the value of your shares based on the market of the Nigerian market has gone down until maybe in Ghana or some other part of the nation, they can start working on, going for more sales and all of that before your value or before your shares will start increasing. Now, this is how these things work. So all these things can be traded. It's seen as a stock market where companies decide to sell shares to the public to buy into their company, thereby being shareholders of that company. Now, talking about bond market talks about buying and selling of government bonds. Now, government sell bonds to the public as well to generate, of course, funds for the government, especially. Okay, like the US during the time of pandemic when they were actually paying their citizens, that were at home, that were not working, they were still paying their citizens. Now, where do government get money, generate money to do all of this? It's through government bonds to take care of their citizens, actually. And that means the money they would have used for infrastructural development and every other thing was put back to actually sustain their citizens. So government sells bonds to public actually to generate money for the government. Then we have commodity market, which is buying and selling of commodities like crude, like the gold, like silver. Like tomorrow I should be selling gold by tomorrow. Like silver, like so many other commodities, copper, aluminum, and all of that. That all commodities can be bought or sold because of their values. Then we have money market. Money market is majorly done by banks. Banks are into money markets. Okay. Then we have derivative markets where you buy and sell products that derive their product from other markets, like talking about crude. Crude is a raw material. There are so many other things that are derived from the product of crude. And the value of those materials or those assets will be based on the production and the cost of that crude. Now, you talk about future markets. Future market talks about buying a particular asset or investing in a particular asset ahead of the future or in future rates or future price, or how you want to say it, in the sense that, let's take for example, a Toyota can decide to actually produce a model, okay, Toyota model by 2025, and now they can tell the public, we have this model. Of course they will make it open to the public. It's only left if you have the money to buy into it, or if you, of course it's an investment, you can say, okay, I'll buy. Of course, this is 2022. That means you have 3 years interval. That's why we said investment should be seen as long-term stuff, not I want to make money now. No. Some investment takes quite some number of years before it starts yielding. Okay, so you can decide, okay, we're selling this. This is the product we sell. This is our sample. This is our prototype. Okay, if you have money, you can buy into this. That's, you're trading that particular asset as a future. That means you're trading futures. You pay into based on your agreement. The agreements can be paid now because actually the essence is to generate funds, okay, to go into the business. You pay now, but the product will be delivered to you at the production time. which is no longer, now the price or the value of that product as of that time is no longer, the cost of production is no longer your problem because you paid at today's rate. So that kind of a future, that kind of a market is a future market. You bought, you're buying into the, you are buying ahead of the production date. Now, you have, now in the platform, it's traded as contracts. In the platform where we trade it, it's traded as contract. You will see so contracts, they're all traded as contracts, they're all future markets. Then foreign exchange market, which is the trading of foreign currencies, trading of, which all of us know as foreign exchange. That's basically what most of us know as Forex. Okay, currencies, buying and selling of different currencies. That's exchanging your local currency against another currency based on the value of that, of whatever you're exchanging. Of course, we know that all these things are based on the value. All these things are traded, but their prices are based on the value of those assets. Now you're talking about crypto market, cryptocurrency market, which some of us know as the newest, but this is not the newest of the capital market. We have the newest of the capital markets now as the NFTs, which that one have not really gone viral. But crypto market is trading of digital assets, digital coins, okay, and financial technologies, which majority of us know of: Bitcoin, Ethereum, Litecoin, ADA, Cardano, and all of that. There are a whole lot of Bitcoins that can be traded in this market. Now, the newest of the financial market is the NFTs. Now, most people keep asking this period, since January this period, Bitcoin has been crashing seriously. And the question is why? So many persons don't know. And people bought, currently, Bitcoin is at $37 per one Bitcoin. Yes, as of today, that's the price of Bitcoin. Now, Bitcoin started falling from $66 or $67, which is the highest high it has made over the time of Bitcoin. Okay, it fell from 60 something. Remember, some people bought at that high. If you don't understand technical charts or price action or what happens when price wants to go down or up, you might start buying from that high. Some people bought at that 67. And since that time, since this year, Bitcoin has been down. Now the question is why? Which one of the reasons, outside every other reason, one of the reasons is a new digital asset that also stores information, that also stores similar information that Bitcoin stores, is already up, which is the NFTs. NFTs is a shift from Bitcoin, which if the NFT is a shift from Bitcoin, that means the investors that had their whole lot of money on Bitcoin, or that invested whole lot volume on Bitcoin, some has pulled out their funds to invest in other projects like the NFTs. Now, if that has happened, what will take the price up? It's only volume that takes a particular asset up. If people impute their volume or buy into that asset with much volume, which volume here talks about money, so buys into that asset with much volume, it will, because of demand, of course, if the demand is high, the price will go up. Not that the demand has reduced. Why? Because there's another asset or digital asset that stores the same information that Bitcoin stores or cryptocurrency stores. Cryptocurrency store. That means an attention has shifted from crypto market to NFT market. So all of these things you wouldn't know if you are not in the trading business or in the trading world. These are opportunities that people look at for on yearly basis. It just comes up, and if you understand what you're doing, you know where you should put your money. If you understand what you're doing, you know where you should put your money, you know where there are opportunities. Now, NFTs is the new phase of the internet, which will replace the internet world. Okay, so already people are investing heavily on them. By the time it will get to us here, they've already cashed out heavily. So, but that's by the way. That's by the way. Then we have all of these things can be traded. and they're all represented in charts. All their prices are all represented in charts, which we'll be studying when we get to technical analysis, which is our intermediate class. All of these things are represented in charts. Okay, history, introduction to Forex, history of Forex. After this, I will attend to some questions. Remember, the class is 1 hour, 30 minutes. So we'll be stopping by 9:30. But before then, I would stop by 9:20 so that we use 10 minutes to answer your questions. Now, history of Forex. Talking about how it all started. For me, Forex has been in existence for over the years. Okay, it's dated back ancient times, when there was when the time of trade by barter. The time of trade by barter. Okay, so people needed, maybe you need goat, someone else has yam. He said, let's do an exchange. Why? Because you want something that will solve your need as of that time. Okay, you can decide to do an exchange with yam and goats. Now, what the problem of then is that the value, whatever you're exchanging, does not have a proper, there's no way to properly determine the value of what you're exchanging. Now, you can't compare goat and yam because they don't have the same value. But because there's no way to actually ascertain the value, and what you needed to solve was your immediate need. You wanted to solve your immediate need, so you can agree to an exchange. Okay, and you do an exchange. Of course, before an exchange can occur, even till now, there must be agreement between two parties, the person that wants to buy and the person that wants to sell, which is the same thing we do in this market. Okay, so as of then till when it was now used, cowries and coins was used as a medium of exchange. Okay, was used as a medium of exchange, and all of this happened at a point. They said they needed to print some note currencies, especially during, it in Third World III or so. Okay, when there was need for foreign, because it was becoming too heavy to carry coins around. Okay, there was need for foreign currencies, and also they needed to use it to finish up their work they were doing and all of that. So then the first dollar was printed. Now the birth of dollar gave birth to Bretton Woods monetary system. Immediately the dollar was printed, it was pegged to dollar. It was pegged to gold, which we know as Bretton Woods monetary system, where $1 was pegged to 35 ounces of gold. That means any exchange you wanted to do as of that time will go through dollar to the value of gold before you can do any exchange. Now, that means if actually a particular nation is doing better than the US, you wouldn't determine the value of that currency. You wouldn't determine the value of that economy. Why? Because US has the basis of, or the benchmark, or the basis for exchange through gold, using the Bretton Woods monetary system. So around 1971, they now looked at it that if this continue, they wouldn't actually ascertain an economy that is doing better, just like Ghana now, or South Africa, or any country is doing better than Nigeria. You wouldn't know. Why? Because you wouldn't know, because that country, you don't really need, you wouldn't ascertain the value of that country compared to your own country. So when these things were going on, now around 1971, they said, okay, let's allow currencies to float freely. Free floating means let's allow, or let them come together so that the value of a currency can be determined by the demand of that currency. That means if a particular currency is highly demanded, it means the economy is doing well. It means that there is value to it. It means there is need for that particular currency. That means the people demanding it have need for it. That's free float of currencies. Now, in that way, they'll be able to ascertain an economy that is doing better than another economy. So this, all of this was able to solve the problem of value. It was able to solve the problem of supply and demand. It was able to actually ascertain the value of an economy through free floating of currency, which brings about what we are trading today, buying and selling based on the value of that currency. Now, which brings about the fluctuation in prices, because as many are demanding for a particular currency, there will be changes in prices, which brings about volatility. There will be changes in prices based on the demand and supply of those currencies. Now, all of this happened, and now in this case, during this period, it was just the big boys that was trading Forex, because much volume was actually required to trade the financial market. But just the big boys that was trading the financial market until around 1998, when internet came to the public. Now they said, okay, these things that the big boys are doing, let's also bring it to the retail traders, which is me and you. Let's bring it to everybody. Now let's have a leverage platform, which is the work of the brokers. They now leverage a platform and did it in a way that if you have small money, it can be magnified or amplified in the market to act like you have big money, to enable you to trade the market, because big money was actually required to trade the market. So that is why now someone can trade with $10, someone can trade with $50, someone can trade with $100, just because the platform is leveraged. Okay. Also, it's seen that up to 4,600 international banks and millions of small and large speculators participate in the markets every day or worldwide. And it's seen that up to 7 trillion dozens of different currencies are exchanged on daily basis in this market. 7 trillion dozens of foreign currencies every day is being exchanged from hand to hand. That's what moves around the Forex market. So this is seen as the biggest market in the world, of course. It is, which is bigger than New York Stock Exchange, US Stock Exchange, of course, bigger than the cryptocurrency market, bigger than any other stock market you can imagine. Currency market is seen as the largest market in the world. And it has a projection that by 2030, it will exceed 7.3 trillion on daily basis that is being exchanged. Now that is the volume in the market. Now, what is Forex? The basic concept behind the foreign exchange market, Forex, is trading of currencies, one pair against another. One pair against another, and it's the world's largest market, consisting of almost 7 trillion in daily volume, and it's growing rapidly. Okay, so the whole idea is, of course, you don't trade it single. Forex is buying or selling of your local currency against another currency. That means you must pay it, then compare their values, compare the strength of their economy, compare the strength of that currency before you choose if you should buy or sell a particular asset. Now that's Forex. Then the value of one currency is determined by its comparison to another currency via their exchange rates. That is where we are coming. This is what we'll be doing throughout our business in trading. Exchange rates. What is the exchange rate of GBP against USD? What is GBP is Great Britain pounds? What is the exchange rate of Canadian dollar against Japanese yen? What is the current exchange rate of this to this? What is the exchange rate of this to this? Okay, then which should I buy and which should I sell based on the exchange rates? That is where we are driving to. So the whole idea is comparing the currencies, the strength of those currencies and the weakness of those currencies based on some fundamental values, based on some basic fundamental data, based on chart history, based on price history, based on what we see in our charts, to decide where we are buying and where we are selling. Okay, so that is Forex. That is Forex. Okay, so now what's time? 9:01. Let me go about this before we go into question and answer. Now, why do we trade Forex? It's a 24-hour market. Forex is traded morning and night. Okay, it trades 24 hours of the day, then 7 and 5 days in the week. Okay, so it trades Monday, Sunday evening, market opens on Sunday evening, trades Monday, Tuesday, Wednesday, Thursday, Friday. Market closes by Sunday night by 10 or 11 p.m. GMT, depending if it's +1 or -1. Now, this is based on the fact that the different time zones of the world, If it's morning here, if business is going on in Nigeria because it's our official time, some other part of the world, they're sleeping. Just like we are going to bed by now, those in the Asian world is just starting their own day. That means businesses are ongoing there. That means their banks are open, there are transactions, Forex is ongoing. Okay, so that's why it's traded 24 hours of the day. We have minimal or no commissions. The commissions to engage in trading the market is very minimal. Just like when you get to bank to buy through Forex, they will tell you, we'll buy at this rate, we'll sell at this rate. And they might just have $2 difference, or yes, will be $1, it will be 9 or whatever. No, between their buying and the selling price, that is still Forex. Now, that is the bank's commission for allowing you buy into foreign currency, right? It could be $1, it could be $2, it could be $3, depending on the spread. Okay, so those are the commissions that bank takes from trading the market, which is also what the brokers do. Now, trading with a broker is just like or having an account with a bank. The only thing they benefit from the market is those for $1, the commissions or the minimal is the commissions they take engaging you in the market. Now, that is one of the reasons brokers can sponsor a program like this. And this is one of the reasons FSP said, okay, train people. FSP contacted UT Academy, train people on how to trade. If they learn, they can do their trading on their own. Of course, just like opening an account with a bank, then do the buying and selling. They make their little profits from the commissions they take from you, which is the difference between the bid and ask price. We'll come to that. So that is the business of what we are doing. Instant execution of market orders, talking about buying instantly. You can decide to buy in particular asset, just like we discussed those capital markets, stock, anything you decide you want to buy, crypto and all of that. All you just need to do is know where to buy, know where to sell. You can just place your order as we are talking. So you have instant execution of market orders. Okay, short selling without an optic. You can decide to sell just like those that do on real estate or whatever. If you want to actually sell any stock or sell anything you have, you need to be in possession of that stock before you can sell. But in this market, you can decide to sell any currency. You can decide to buy, even without having that particular item. Decide to sell. All you just need is a click of a button, sell, and you're in the market. You have volatility. Now, volatility talks about the rate of changes in market, changes of price, exchange rates. Okay, volatility talks about the exchange rate, how it changes. Now, there are a whole lot of volatility in the market based on the demand and supply factor, based on the people demanding a particular asset, based on the volume. When we talk about volume, we talk about money. Based on the money that enters the market, it causes the market to fluctuate in price. Now, those fluctuation or the volatility is what is where traders make money from. If there is no volatility, just like I could remember for the past 1 month, naira to dollar has been ranging between 570, 580. That's local market. 570, 580, 570, 580. Now there is no volatility of course, there is no volatility in naira because the price is only in Nigeria that will use naira. There's no demand for it. So who uses it? It's only outside the four walls of this country, Naira is not being used. That means there is no demand for Naira. Okay. For the fact that there is no demand for Naira, that means it's the central bank that fixes the rate. Central bank fixes the rate outside the economic factors that affect Naira. That is, their price is based on central bank rate. It's not based on demand and supply. It's not based on how many people that want to use it. Nobody wants to use it, of course, outside our local markets. Naira is only used in our local markets. There is no international market for Naira because it's not used anywhere outside Nigeria. Even come on Dubai here, if you go to there, they will tell you they don't know what Naira looks like. You get, so there is no demand for it. So their rate of exchange cannot be determined by popular demand. There is no popular demand for Naira. So that's what every other currency might be discussing, have that volatility, because everything is based on the popular demand. It's based on the demand and supply of those currencies, right? So that's volatility. Accessibility, of course, trading Forex is accessible to everyone. All you just need is your gadget, which could be your phone, your laptop, then of course your internet. Now this will bring you to access the Forex market. Every other thing you need is just the knowledge and the skill. Trading is a skill. Please. It's not a get rich quick scheme. It's not what you just start now, in the next 1 month you want to be making billions. It does not work like that. If that is the idea you have, then please drop it. This is not why we are here. We are here to acquire a skill that can take you for a lifetime. Just like I'm talking about NFTs, I'm able to understand the working principle of NFTs. Why? Because I'm already in the world of financial trading. I can see one single opportunity, just one single opportunity that will change my whole life, change my generation, just by knowing that there are opportunities in trading the financial. All of them are all seen as financial markets. Just by making more research, just by knowing that, okay, there are another level of our new phase of opportunities. Let's put, if it could be 100, just imagine those that invested in Bitcoin. It could be $100 that you're investing, it could be $200. That $200 over a period of years, or 1 year, 2 years, depending, can multiply into billions of Naira, or millions of dollars, or thousands of dollars for you. Okay, just because you are in the space, you are in the trading space, you are in the trading world. So you are looking at for trading is all about looking for where there are opportunities to invest your money. That's trading. Okay, so you have the accessibility technology. Of course, the technology is there for us to always improve in the knowledge of trading. We have possibilities and opportunities. Possibilities and opportunities. We have regulation. There are a whole lot of possibilities. There are a whole lot of opportunities in the market. There are a whole lot of. Just know how to trade. Then sky is your limit. You might not have fun. You might not have good fun to start. But if you know what you're doing, and when the fun starts coming, you can manage it very well. You can sustain your fun. You can manage it. You can make profits, man. People are looking for where to put their money. The only problem is, where should I put and my money is safe? Where should I put my money and my money is safe? That's the only thing people are looking for. So if you understand the technicalities of trading, you are good to go. So there are a whole lot of opportunities. If you are good, you can decide to teach someone. Not as much that we are teaching it for free. Forex or trading knowledge is not free. It's not a cheap knowledge at all. It's worth more than all the years I spent going to school. I remembered the last time I was in university, I studied petroleum engineering, but I don't know where my certificate is. Okay, that means I spent almost, because in report, I did basic plus 5 years of engineering, 6 years already. I'm not talking of strike. I'm not talking of other drawbacks. Of course, I didn't have carryover. I did well in school and all of that. I'm not talking of strike, but I didn't, this at the end of the day, plus service and all of that, you see that you are counting 7, 8, 9 years. just trying to get it. You're not even, I've not added your secondary, your primary school, not your primary school. You've not added secondary school. Talk more of other things. Now, all these years are spent just to, educate yourself and maybe get a certificate. This part of the world, you probably get a job that can pay, even if it's in this, those in the oil firms, okay, they can earn higher. But every other price sector, you are talking of 100, 50, 100, depending anywhere, depending where you find yourself, 1,000. But yet, you can't even, that cannot even work out. Okay, so trading is not what you just do today and you want to start making it large tomorrow. No, it's a skill set. You have to build yourself over time. By the time you are fortified, then you can sit and enjoy the works of your hands. So there are a whole lot of opportunities. Yes, I can tell you. You can teach people and make money. You can charge people. If you know it too well, you can have an institute where you teach people on how to trade. Of course, you collect money. Is it for free? It's not for free. It's not for free. This one we are doing here, is not free. They've paid for it. If they didn't pay me to teach you, of course, I can't teach you for free. If someone comes from this room and says, okay, I want a private class, I'll charge the person. Because I'm spending my time and I'm giving person my knowledge, my hard-earned knowledge. I'll charge the person and teach the person. It's not going to be for free. But because some persons have already sponsored it, you can do this for free. But trading knowledge, I tell you, is not gotten for free. So we have a whole lot of opportunities. You can be a signal generator, can generate signal for people and they pay you for it, for generating signal. You can manage people's money if you are good. If you're not good, please don't dive into that. If you're not good, don't dive into manage, so that it will not put you under unnecessary pressure. Managing someone's money has a way of putting you under unnecessary pressure, especially when you tell someone, come, I will give you 100%. I will give you 20%. You are not the market. Remember, we are all retail traders. You are not the market. What if that 30% you promise someone, you're unable to make that 30%? Where will you get the money and pay the person? It becomes something of where you have to subject yourself under pressure to make that money and pay the person, because it's a signed document. Unlike what we do, we don't give you any fees ROI. If you want your fund to be managed, which is we do it with a minimum of $1,000. In that case, your fund you are in charge of your fund. You are seeing your money every day. You are seeing your trade. You see everything that goes on in the account. Okay, so in that case, we are not giving you any piece percent, but we'll tell you whatever you're investing, you will take the profit at the end of the month. Whatever profit that is added to your capital, we'll share it, depending on the percentage we agreed. Now, if we agree on 70-30, what it means is that you are also risking 30% of your capital. So you should have a percentage risk. Investment is risk. Every investment is risk. So you should have a percentage risk that you are putting into that contract. I also have my own percentage risk I'm putting into that contract. The same way we have percentage profit we are taking. So that's an agreement. It's understandable. And of course, you have access to your money. You have access. Everything is done with your account. At the end of the day, you can decide to actually breach you can decide to take back your money if the contract is breached. So that is different than telling someone, I will give you 100%. What if you don't make 100%? How will you get the money? So if you are not, don't dive into managing people's funds. So regulation, Forex is regulated, of course. It's the world business. It's the world business. So it's fully regulated. There are no kind of manipulations except some brokers that have their server in Nigeria, but that's by the way. So Forex is fully regulated. Then it can be traded anywhere in the world. Just have your gadgets, of course, your internet and all of that. You can trade the financial market. Just have the skill, know where to buy, know where to invest, know the new technologies that in the market, know the new phase of the market, know where opportunities know where the new opportunities are coming from. That will prompt you to actually decide if you should buy into shares. And just like COVID, when COVID came out and the vaccine came out, people knew that COVID vaccine was going to be a boom, because of course, as long as the word is involved, and of course, not in Nigeria, people want to be alive. So it was mandatory for those traveling and all of that to take the vaccine of COVID. And of course, if people are buying into the vaccine of COVID, their shares will be boom. Their shares will boom. So people that knew that already bought into the shares of all of those pharmaceutical companies that produce vaccine, COVID-19 vaccine. And that was a whole lot of opportunity for so many that bought into those shares. So those are the things you know if you are in the trading space, if you're in the trading career, you get to understand when these things are coming up and you buy into their businesses and into their shares. And just one good opportunity can change your whole life. Just one good opportunity you get into. Just one good opportunity you get into can change your whole financial life. So that's about why we trade the financial markets. I think I will just talk about this, then we'll end here for today. Now, talking about major and minor market participants. Major and minor participants, those that participate in the market, which is categorized into two groups. We have the major participants. Now, the major participants are those that have money, in simple terms. Those that have money, good money. When we talk about money, we're talking about millions and billions of dollars to trade the market, to invest. That are seen as investors. Please mute your mic. Thank you. That if you have a question, just hold on. I will soon be done so you can ask your question. That are seen as big investors, hedge funds, okay, central banks, all. Central banks of the world, okay, commercial banks, large corporations, talking about Apple, Facebook, Google, Amazon, Coca-Cola, Shell, Chevron, all the big companies you can think of, they all trade the financial market. Also, in as much as we can trade their shares, they also trade, okay? So these are seen as big, major participants in the market. And why do we call them participants? They have the volume. Since they have the volume, they can decide the direction of the market by injecting much volume in the market. Now, that means they are the decision makers in the Forex. They decide in the sense that they decide where to invest the money. It's just like when you go to market and you are the seller and someone is pricing you a particular product for let's say 5,000 naira, another person is pricing it for 10,000. Of course, you sell it to someone that has 10,000. It's the same thing with the market. If market decides to buy, it will only buy because big market participants are interested in buying that market. Big market investors are interested in investing on that particular asset. That is the reason why it will buy. Just like I said, if you are comparing Bitcoin to NFTs, major investors have put out their money to inject in another project. So that will cause a spike or a rise in that area. That is the same thing that happens. Okay, so these major participants have enough volume to decide the direction of the market. Every other person, me and you, that is starting with $10, $20, $50, $100, $200, $500, $10,000, even up to $100,000, even up to $1 million, we are all minor participants because even $100,000 cannot touch a pin in this market. So all of us are seen as minor or retail traders. We are all retail traders. So the question is, how do retail traders make money? So every other participants are seen as retail traders, which is me and you. How do we make money? Is by studying the moves of these major participants. Is by studying how they trade. Is by having the requisite skill that is needed to copy or, to mimic these major investors. We mimic them even with our small fund. Then we can, in that way, we can make money from the market. What we've come to do here is not to bring $10, is not to bring $50, make $1 million. No, that's not what we've come to learn. We've come to learn how you can use your $50 and make, even if it's minimum of $5 in a day, even if it's minimum of $10, because you have small fund. You can't have $50 and be chasing $1,000 within a space of 2 days or 3 days. It doesn't happen. If you have $1,000, you can be chasing $50 in a day. You can be chasing $100 in a day, depending on your risk appetite. If you have $10,000, you can be chasing $200, $500, $1,000 in a day, because you have volume. But if you have $50, how come you are chasing $100? You want to make all 150% of your accounts in this market? No, it doesn't work like that. So everything depends on what you have in your pocket. People make large, fat money from this market. Yes, if they have money. If you have up to $20,000, why won't you make money? If you understand the techniques, if you understand the technicalities of trading the market. So what you've come to do is how retail traders can make little money from the market, following the steps of the big investors. Following now, like I said, fundamentally, they have what they study to actually ascertain where to invest their money. That is on fundamental. But technically in the chart, they also have price representation. If investors are in the market, you will know, because you study their move. You study how the chart moves or reacts to those zones. So these things are already, the histories are created for you to study and understand. Then you can now mimic the heavy investors or the big investors and make profit from the market, depending on the amount you are bringing. Everything depends on the money you have. First of all, you get the skill. When you get the skill, we teach you on how to manage whatever you have and make as much profit as you can. Of course, the market is so big. Nobody can take all the money. If you make profits, it's for you. You make your profits. Another person makes their profits. Me, I also make my profit. The market will pay us, because the market, there is money in the market. The market is voluminous. There is a whole lot of volume in the market. I can pay anybody, can pay everybody. How much do you want to make? How much do you want to make? So the market is there to actually pay you, as long as you understand how to make the little profits, depending on the little money you bring. I call it little because I know that most of us might be starting with small fund. So anything you start with will depend whatever you are going to be making from the market. So this is already 9:24. I think we'll be stopping here because the class should take us 1 hour 30 minutes, so that we can go and assimilate or take in the one land, wait for another day. Like I said, it's going to take us some time to, like 5 days, 5 classes to finish the basic class, then we'll go into intermediate class. So please don't be in a hurry, okay? Just follow us one step. You can't one before you can't two. Follow one step at a time so that we can assimilate what we are teaching, then before we go to the next phase. So please, let's use 5 minutes. If you have any question, you can go ahead and ask your question.
You made mention of scale. How do one get the scale?
Sorry?
You made mention of scale through, clearly, you said you have a scale which you trade with. So I wanted to know, what is the scale all about?
Skill? Are you talking about skill?
Yes.
The skill is what you are doing already now. It's the learning process. The skill is to teach you. This is the basic. The skill is to teach you how to analyze the charts. Let me share my chart. The skill is to teach you how to analyze the charts. Let me The skill is to teach you how to analyze the chart. This is the chart. If you see like this, will you just place a buy or sell? The skill is to teach you how to actually analyze each each asset, then decide where you should buy or sell. That's the skill we are talking about. So this is the process. This will be done in your technical analysis. We're not doing this now. This is during your technical analysis, where to place your buy and where to place your sell. So that's what the skill will be doing for you. So, but then let's not talk about this. We've not got into this. Yeah.
I want to ask another one. How can I get the app, the Forex Trade app, and get registered on it?
Okay, we'll do that. That should be in our next class. Now, next class we'll do a class on how to download the platform, register our demo account and a live account too.
Yes.
Yes, so we'll do that on Thursday on how to register on live account, demo account, then download the app so that you can practice with your demo account.
Okay, why I asked because I already have the app. So they asked me to open a demo account. I did that, and I don't get the clearance on it.
Okay, no problem. I will show you how to go about it.
That is on Thursday.
Yes, on Thursday. You can even chat me privately. I can, but then you can wait on till Thursday. You don't want to wait till Thursday. You can just chat me up. I'll direct you on how to go about it.
And you drop your WhatsApp number on the platform.
Okay, just check that group. Just check that group chat. You'll see admin. Just start any of the admin up on how to register. You see
Okay.
that, yes, any of the admin up there, they will direct you or will direct you on how to register. Yeah.
Okay, thank you.
You're welcome.
Good night.
Any other question? Yeah, good night.
No.
Yes, I'm talking from the room. Do we have, yeah, money matters. Please go ahead with your question.
Hello, good evening to everyone.
Yes.
Anyway, I would like to recommend you with your teachings, although I joined late just because of the time factor. I joined earlier and then you were like, the time will be starting at 8:10. Later it was 8 something, let's say 8:04. I joined and then the class has almost begun. I just want to know, some of us are not in Nigeria, so please, just if in case there's a problem with the time issues, please put it on the platform.
Okay. Okay, no problem.
Please.
No.
Because
go ahead.
Yeah, because I really felt bad when I joined the class and then the class has almost started.
Okay.
Because I don't want to miss the class at all. I just don't want to miss the class. So I'm kind of, I'm not comfortable with it, but it's fine.
Okay. What happened was that I said normally the time is 8 p.m. Nigerian time, which is, I think, is 1 hour ahead of your time. 8 p.m. Nigerian time. But because people are coming back from work, people have not settled down, or we just have to give that 10 minutes to people for people to join. If we start at 8 at the dot, we might just start with 2 persons and it wouldn't be nice when we can have up to 10 or 15 in the room. So that extra 10 minutes is just to allow people to come in, then we can commence the class. But normally the time is 8 p.m. Nigerian time. Then extra 10 minutes, depending, can just give it to allow people to join for us to start. But if there's any changes in time, of course, it will be given, it will be updated in the group, WhatsApp class, WhatsApp group. So always check your WhatsApp for updates.
Okay. You know what? I checked, I went through my WhatsApp messages and then I saw your message that the class will be starting very soon. So I joined the Zoom thing and then you were like, we'll be coming later.
Okay.
And you were like 8:10, which at that time, my time was doing something. So I was like, oh, there's more time far gone.
Okay, it's just 10 minutes from 8.
All right, all right.
Any other question?
No, no. I just joined the class, so it's fine for now. Maybe some other time.
No problem. Others, Tempo, Stephen, Aziz, Isaac, Osei, Engineer Kenneth, Choma, Inyama, David.
Okay, I think I also joined late, but then I want to find out our next meeting day.
Is on Thursday.
Thursday,
Wait,
okay.
yeah, Thursday, same time, same link.
The same time. Okay.
Yeah.
All right. Thank you.
If any of you need the manual, please identify so we can send the manual to you.
Okay.
Any other question?
The manual is the last time you said how much was it?
It's 3,000. Are you in? If you are in Ghana, there is an account that we have a mobile account, MTN mobile money in Ghana. We have your local account where you can.
The 3,000 is it in Naira or what?
It's in Naira, yes, it's in Naira.
So that would be like how much is Ghana? Let me see. Okay.
In Ghana, I don't know. Someone.
But what is the equivalent in dollars? Let me know. Probably I can.
Equivalent in dollars is Okay, in Ghana cedis, it should be around 30 Ghana cedis, around that.
Okay.
Yes, because I know 5,000 is around 80 Ghana cedis.
How do we get that account that you are talking of?
I will send it to the group chat.
Okay.
Or just say hi to me. I will send it to the group chat too. Then pay it. You can just do the conversion and in dollar 30 is around $1 is around 500, 600. So it's around $5. So.
Okay.
Yeah. Yes. Any other question? Money matters. You want to say something? Your hands are up.
No.
Okay. So I believe there is no other question. Thank you, everyone. So I will send it to group chat if you want to get the manual. Thank you, everyone. See you again on Thursday. We'll continue our basic class. So
All
please,
right.
if you get a manual, please read it up. If possible. Yeah, go online, do some research so that when we come to class, we can ask some questions. So thank you and good night.
Same to you.
Thank you. You're welcome.